Hey all, welcome to ShareTreck. This is Raj here. Friends, I hope you have a great weekend. I'm just going to do a quick review of where we are at the end of Saturday and what's likely to happen next week. After the disclaimer, let's get started. Welcome back. We are looking at the Nasdaq futures and we can see that we are not able to break through the last high, and we have ended down 0.30%. That's not exactly a great sign, but nothing too much to worry about. We look at QQQ again. QQQ could not break through the previous high, and we still have a resistance which has been left unchallenged at 487.20, but not to worry, we still have support at 474.19, and the 9-day exponential is at 474.44. So there are two levels of support out there to help us bounce back. And if we bounce back, I think that it will be a validation that there is a little strength in the market and that we are still in a bullish channel. But remember, as I mentioned to you earlier, it's my opinion that this bullish channel is very difficult to sustain because it's too steep, and therefore we still have a possibility for 2 or 3 days of sidewards movement and still be in this diagonal line of support. Eventually, I think this diagonal line of support will start moving to be a much more comfortable angle, and as long as we continue to have higher lows, we'll be fine. What we also need is higher highs. So we have the first set of higher highs out here, so that's a positive. We need to have more higher highs. If we continue to have more higher highs, then we are definitely going to go above 487.20. Will this happen? I don't think anyone has an answer for that. If you look at the momentum for answers, momentum is flat but above average. If you look at MACD for answer, it's still bullish. So it could go either way. Now let's look at where the technology sector ended. We have Google up 0.86% at the end of the day, and we have Tesla down 2.32%, going back firmly under the resistance of 240.84. We still have support from 233.99. So that's positive for Tesla. Tesla is still on a bullish channel, so that's good. Apple is down 0.29%, and the chart is looking pretty decent to me. And in my mind, in my opinion, I think that we are looking at a very strong chart for Apple with a potential reverse head and shoulders. We'll see how it proceeds going forward, but this is an idea that I am watching. I wanted to share that with you guys. Next, we have a Meta, which is up 0.40%. Again, we have got the reverse head and shoulders, and we have a target here of somewhere around $631, and we are proceeding towards that. In my opinion, we are a bit overbought, but in the past Meta has gone above 70% on RSI and still proceeded further. MACD is also bullish. There could be a bit of consolidation. Amazon is up 0.91%, doing very well, and it has converted the resistance, which is at 189.18, into a support. Things are looking good for Amazon. Both momentum and MACD is looking good. Microsoft is down 0.78%. We have a double bottom target of around $450 to $451, and we have to see whether we can move towards it. The ascent is very, very sharp. It's not sustainable, so expect a little consolidation and then move upwards. Again, friends, these are all my personal opinion, not financial advice. Technical analysis alone cannot predict the future. You have to look at fundamentals, geopolitics, and so many other factors. So I'm just sharing my personal opinion. You can give your opinion in the comment section. I look forward to that. AMD is down 0.50%. Palantir is up 1%. It ended at 37.20. Palantir seems to have a lot of strength in it. There is a little more room left on the RSI before it hits its all-time high of 80.83 on the RSI chart. And MACD is still bullish but tending towards the signal line, perhaps indicating that there's going to be a bit of consolidation. before any further move up, and there is always a risk of moving down because we're in blue sky area where Palantir is at an all-time high. And then you have FNGU, which is down 1.03%, but it is still above the horizontal support of 413.68, so I won't worry too much about it. And we have the resistance at 425.60. Next, we look at Broadcom, which was up 2.20%, and I would venture to say it has got a double bottom, but because of this huge green candle, I'm trying not to do that. But I think overall Broadcom looks bullish. We have Oracle, which is up 0.24%, and this is kind of a bullish pennant forming out here, so it has to break out on the upside, but at the same time we are at a very high for Oracle, so anything could happen out there. We are looking at Micron Technologies, which has been beaten down significantly, and we have a potential double bottom out here, so I'll watch Micron closely because it could potentially jump up. And then the next resistance for it would be somewhere around, I think, $97 or something in that range is where I think the next resistance would be. We have Cloudflare down 0.46%, and we have NVIDIA down 1.59%, still struggling to break out above this diagonal line of resistance from a previous bull channel. And we are coming to a point where we are going to have to break through the diagonal line of resistance from the previous bullish wedge, which was performing the role of resistance. So it's going to be very tricky ahead for NVIDIA. If it breaks through these, then I think we would be in an inferior bull channel, because while we are focusing on the negatives, let us look at the fact that we have higher lows going on out here. All we are lacking is higher highs. Once we start getting higher highs, things should look better. Next, let us look at Qualcomm, which is down 2.87 on talks of wanting to take over Intel. So that's the message from the market: don't touch the falling knife. Next, let us look at SMCI. It's up 4.59%, and it has still got good support at 429.85. So I'm going to color this green. And we have resistance from the 20-day exponential moving average, which is this orange line that we see out here. Chart is a little bit weak from a momentum and RSI perspective, but MACD is still bullish. ARM Technologies should do way better than what it is doing because it's all over the place. It's down 1.20%, being supported by all the exponential moving averages. Momentum is decent but falling, and MACD is bullish but tending towards the signal line for a bearish crossover. ASML is down 3.97%. Chart is looking very weak. And we have Intel Corporation up 3.31% on talks of Qualcomm taking over and also spinning off a subsidiary for Foundry. And then we have FNGD, which is up 1.18% because it's a negative correlation to FNGU. And we have SMH, which is the semiconductor sector ETF, which is down 1.32%, reflecting the overall weakness in the semiconductor market. But if you were to look at this diagonal line of support from here, you will see that we are on a bull channel. The only validation we need is we need higher highs, and once we start getting higher highs, we can be sure that things are looking good. I'm talking about higher highs on this super cycle, not on the minor up leg, which is this one. And in this, we already have higher highs and higher lows, but we need to break through above this. Now, apart from this, we are going to go and have a look at genomics, where PACB is down 10.54%. It has given up all the aggressive gains that it had taken before. A sharp fall in momentum. Is there any bad news? There is no bad news that I can see of late. IMTX is down 0.66%. Bluebird Bio down 4.43%. In fact, the entire genomics sector has fallen, except for Grail, which has a gain of 0.58%, and Altimmune, which has a gain of 0.22%. Everything else has dropped significantly. And if we were to go and have a look at the stock market heat map, we will find that most of the heat map is red, except for a few companies here and there, but the entire consumer defensive and utilities are looking green to me, and gold is looking green. So basically, the people have taken a defensive stance. Could it be because people are looking at what happened in the past? See here, we have a huge drop after the first rate cut. I have shown this chart to you before. This chart may not look very formidable because of the scale of the chart. It's a monthly candle and the distances don't look that formidable. But if I was to take a measuring widget and look at how much drop happened in the market from the rate cut on 31st of October, which was the second rate cut after a 50 basis point rate cut in September, we see that by March of the following year, there was a 21.93% drop in QQQ. Now, 21.93 is twice the correction. A correction is around 10%. So are people afraid that this is what could happen? And the context of the rate cut also matters. If the rate cut is done in order to prevent a recession, then the market definitely responds the way that you are seeing out here. So the question is, are we in for a soft landing or are we in for a recession? So here is something I want to share with you. Here you can see that the FedEx stock plummeted after earnings, and this happened yesterday, and they blamed that manufacturers are having a tough time in Q1, and that was the reason why things went down. And here you can see the FedEx chart. When they reported their earnings on 25th of June 2024 after hours, we saw an immediate spike because they beat both on earnings as well as revenue, and the market rewarded them nicely with a huge gap up. And we stayed there until the next earnings came in. The next earnings were released on 19th of September, that is on Thursday, and there was a negative surprise of 24.25% on the earnings and 1.24% on the revenue. Now this is going to get into the market consciousness because those people who had FedEx shares, they saw a huge drop in the share price. It was a huge gap down. I'm just going to take a widget from here and measure the drop before and after the earnings. So we saw a drop of 16.37% on FedEx shares. So FedEx generally gives a reflection of the velocity and momentum of trade and commerce in the economy, which kind of reflects the health of the economy. If this is going to be seen by more and more people in the stock market, then the feelings that probably the huge 50 basis point rate cut from the Fed has not come from a position of strength, but rather it has come from a position of weakness, is going to get hold, which can then push our share prices down. Now here is another chart to look at. This is a chart of the delinquency rate on consumer loans from all commercial banks. And as you can see, from the bottom of 2022, we started picking up, and this consumer delinquency number is going up. This is not a good sign. And as this number raises, it shows weakening consumer confidence, and that in turn can impact the market sentiment. Here is another chart I would like to show you. This is the federal funds effective rate. This shows all the rate cuts that have happened and the rate hikes that have happened. So you'll see, let us say, starting from 1965, if we see, whenever there has been a rate cut, it has preceded a recession. And at the very bottom, when the rates have gone to the lowest possible, it has stimulated the economy and things have gone up again. And as a result of the inflation, the rates keep on going up, and they reach a point where the Federal Reserve realizes that the indicators are starting to point towards weaker consumer confidence, increasing unemployment, and reducing consumer confidence. All of those things prompts them to start cutting the rates. And by the time, most of the cases, in most of the times that we have been in this situation, it has been too late before the Fed has cut the rates, and it has been followed by a recession immediately. You see that in 1958, then we see that in 1960, and we see that in 1969. In most of the cases, to cut a long story short, in most of the cases, we have had highest rates being followed by rate cuts and followed immediately by recession. So what is going to be different this time around? Like, we are in the same situation like we were in somewhere around 2007, 2008 time frame, and the rate cut is now starting. Is it too late? That is the question that most people might be thinking about, which causes hesitancy. And in that context, if you look at QQQ, and if you see that we are unable to break this resistance out here, which is not even an all-time high, it's 487.20. I'm not talking about 503. We have not yet been able to break this. So the question would be, is it like all the times in the past when the rate cut happened a bit too late and recession was unavoidable? Or are we experienced enough right now that the Fed has cut the rates just in time so that they can engineer a perfect soft landing? That is the question. And the way the market interprets the situation will determine whether we are going to go down, test this support, and then move up, or whether we are going to continue to fall. So if we start falling, our first support is going to be 474.19, and then the next support is going to be this diagonal line of support, which has been coming with us for a long time. And after that, we have those exponential moving averages, and then we have 460.97. All this will take a long time to unwind. So I think that all the way up to end of October, we are going to have a lot of volatility happening to us. One of the things I think which reduced risk for us is that Bank of Japan has signaled that they are in no rush in raising rates, and they have kept the policy steady despite the fact that their inflation came above expectation. This kind of gives a lot of comfort to people who have got yen carry forward trades, because there is no unwinding of those trades which last time brought the index down. That has not happened right now. The question is whether Bank of Japan is doing this in order to prevent having any impact on the US elections, not being seen as tilting the scales in any direction. I don't know. It's beyond my comprehension. But the fact that they have not raised the interest rates seems to indicate to me that a big risk has been taken out of the play right now. But it is still lurking in the background, because we have the Japanese economic calendar out here, and you can see that there is going to be a speech by the Bank of Japan governor on 24th of September. The tone of his speech can also give an idea of what's likely to happen. Is there going to be a repeat yen trade unraveling? That's the question. And then we have the Japanese consumer confidence coming up on 1st of October. And of course, they will have another rate decision coming up probably after November. So all of these things have to be kept in mind. And we have the Ukraine-Russia war, which is still going on. Then we have the Israel and Hamas war. It's a proxy war between Israel and Iran. It's starting to spiral out now. We have bombings happening in Lebanon. So all of these geopolitical factors also have to be kept in mind, because any of those can create a supply chain crunch. It can push the price of oil up, and it can again spike inflation. So those are all the negative factors. But then on the positive side, we have to keep in mind that AI is improving employee productivity in many industries. We have actual deployment of AI into the workplace by companies like Salesforce, by Amazon, and many others, and a lot of investments taking place in the AI sector. Well, if you see the collection of headlines I have out here, it shows the amount of money being pumped into AI by all the big players as well as the government. Like Biden has given $8.5 billion so far for big semiconductor projects in 4 states. And the overall investment of around $225 billion in 12 months have taken place through all the majors into AI. And of course, we also are seeing the startup of a lot of merger and acquisition activities. Qualcomm was in talks over Intel to take over Intel, and meanwhile Intel is trying to spin off its foundry as a separate entity. So all of these things are happening. So that gives a lot of optimism that there is going to be activities going on in the economy to keep the markets up. And also, if you recollect, of course, I don't want to quote Cathy Woods every time, but one of her core theses was that the emergence of AI and green energy and robotics is all going to lead to multiple industrial revolutions happening at the same time, and therefore productivity is going to go up significantly and cost of production is going to drop very fast, as a result of which the quality of life of everybody is going to improve, and the markets have to jump multiple times in valuation. So that's the central thesis, the way I understand Cathy Wood was looking at. Now, if AI actually turns out to be a revolution, and if robotics, which has been developed by Boston Dynamics and a few other companies, were to integrate AI into them, and if we have good storage technology, improved battery technology, which can make the robots autonomous, then I think we are looking at a very huge revolution. So those are the positives. And of course, nobody has a crystal ball to say what's going to happen in future. So this Saturday, when I'm looking at the aftermath of all the trading from the previous week, I'm cautiously optimistic. At the same time, I'm sitting on the sidelines with most of my investments. I have cash in hand, and I'm waiting to see if we can test our previous supports, which were earlier resistance that we broke through. So if we test the support and bounce back up, then I'm definitely coming in. Otherwise, I'm going to stay on the sidelines. And we cannot ignore history either. Of course, past performance does not indicate future performance. But in the past, there have been two consistent trends. Interest rate cuts have always been followed by recessions. So could a recession be in the cards? That's one of the big question. And the second historical tradition is that last 2 weeks of September and the month of October have been historically horrible. Is it going to be different this time? I don't want to take too much against these two historical odds. So I'm staying on the sidelines. I would like to hear from you guys. What are you guys doing? What is your thought? Do you agree with my analysis? Of course, remember, we are all retail investors out here. I'm not an expert. I'm sharing my thoughts with you, and I would look forward to get your feedback. Some of you have already started sharing your thoughts in the comment section. It's very refreshing, and it gives me better insight. So please do not hesitate to share your thoughts, and I look forward to reading them. Thanks, and have a great day. Bye for now.